Alright traders, today I'm going to show you a new tool I made called the RSS Relentless Steady Steps Stats Map. This tool is built to provide you more insights on a game plan you already are using or a game plan you are going to test out or want to use to provide more insights on the returns, on the total drawdown you can get in a logical manner, and how you can calculate your risk in a logical way and know you're within safe boundaries to sustain logical and natural drawdown. So we'll go right into it with explaining you the tool within 3 different situations, being a micro scalper, someone takes daily setups, and someone who swing trades. So for this example, we're going to use these stats: the win rate, the average R, risk per trade, total risk, the amount of trades you take within a period, the risk appetite that is simply built to provide you insights on choosing low, medium, and aggressive. Low meaning you'll have a 30% chance of hitting that number of consecutive losses within 100 or 1,000 trades, with aggressive being a 80% chance of hitting that number. But as you choose a lower or higher risk appetite, the aggressive appetite will give a lower number of trades that will provide you with the total risk divided by the amount of trades you can hit in a consecutive losses, divided by that will give you a higher risk per trade suggestion than giving in a lower amount with lower risk appetite with a lower chance of hitting that amount of numbers as a drawdown. So your risk be a bit more tight as you manage not to hit that amount of numbers. So we'll start with the first profile. It's a 65% win rate. This trader trades very actively during the market hours, taking 6 trades per day, around 30 trades per week, uses tight stops and small targets, had a low risk appetite because it's his own capital and he manages just one account. So staying consistency matters more than big gains. This one has a 65% win rate, an average R of 2. He risks about 0.25% per trade. His total capital is 2% at risk. So he risks in total for this period or his risk management plan 2% of the total capital, which is 10,000 as his own capital, and he has around 6 trades per day. He wants a risk appetite that is low as he wants to manage his account and sustain drawdowns. So staying consistent matters more than big gains. So if we'll calculate this on a basis, we'll see that the results turn out to give us a 0.95 R expectancy. That's almost an expectancy being every R, so every risk you take per trade, so the capital risk per trade is $25, you'll almost get it back as there is a 5% room for that. So the total return of 6 trades will be 5.7 R. So within a day, the average return will be 5.7 R. Looking back at this, we'll go lower to explain it in dollar amounts. The total risk was $25, total risk at capital is $200. The average return per trade is $23.75. The projected total profit is $142.5, and the estimated drawdown over 100 losses is $100. So the maximum amount of drawdown we might lose, as our risk appetite is very, very low, we'll see that within 100 trades, the amount of times he will lose in a row with 4 losses being 2%. This is the same for the max consecutive losses over 1,000 trades. It's a lot bigger as there is a way higher chance to hit that. I think if we might have 3 losses here, it would be around 30% as well, but with this win rate, we'll have a lower chance of hitting so many losses in a row. This is the same for the max consecutive wins, but turned around. There is a high chance we will hit 7 wins, about 30% within 100 trades, and there is even a 30% rate that will hit 14 wins in a row for 1,000 trades. And our suggested risk per trade, that is simply based on the total risk, any potential for a consecutive loss streak +1, so the 4 trades, 4 losses that are possible, +1 to protect this streak, we'll have to use $40. So this tells us that if we really want to get the max out of our potential and our plan, and we have a high alignment rate, meaning that almost all of our trades or 80% of our trades are aligned to this plan that expects these results, we can up our risk. So this is the suggested risk per trade, and you can look at this number to define if you could potentially take more risk if you are consistent within the stats. So this is interesting. This is for a micro scalper within a day, but we can also view 30 trades being a week for a micro scalper that trades 5 days a week, and we'll see that the average return is 28.5 R max, and we can expect about $712.5 per week back on our capital. This is quite a high expectancy back, so it all depends if this is really aligned with your executions. So please be aware, when you're configuring and putting in a lot of values from a plan that has not been executed, it can be overwhelming and enthusiastic to think, oh, I have a great edge, and in theory you do. But please be aware that it's always important to track your own performance instead of only looking at the plan itself. The alignment rate tells you a lot about how aligned and how much percentage you really can expect back on your plan. And there will be days and weeks or even months that are anomalies from the normal. So a historical return does not per se guarantee future results. So this is interesting. We'll have a lot of different stats back on the returns here, but this really gives only the difference and insight of how much we can expect back for that series. So it doesn't really influence the risk and reward. So we'll use the other example for this one is the daily setups. This trader takes 2 to 3 solid trades per day, around 10 per week, 40 per month, trades with a 50k prop firm account, limited by a 5% max drawdown, that is almost for every firm, has a medium risk appetite as he needs to make progression fast enough to keep the account, but has to manage it risk tightly. Alright, we'll fill in the inputs for this one with 50% win rate, 1.8 average R. He risks about 1% per trade, has a total risk of 5%, and has 10 trades per week, as we will calculate it right now. His total capital is 50k. So as you can see in this example, as I already have worked a lot with expectancy and calculating my risk, I know that this win rate of 50% has a decent chance of getting some losses in a row, even more than these 4 losses of the previous one with the 65% win rate. So risking 1% per trade is quite big on 5%, as it's a decent probability of hitting 5 losses in a row with a 50% win rate. But we'll see right now. We'll set the risk appetite to medium and we'll calculate. And what we'll see is that a 50% chance is in the 100 of trades that will hit a 7 losses. So that means that will destroy our account and our drawdown if we use these stats and the amount of risk, so 1% per trade. You can see that the cumulative returns are decent. So about 10 trades he'll have back 4R, but he can up the expectancy so he can lower the risk, as the suggested risk is almost at half at what he is using right now. So the suggested risk to sustain this drawdown is 0.63 risk instead of taking 1% risk per trade. Looking this at a return over a month period, we'll see that he has some decent returns, but he needs to maximize his risk, but maximizing his risk at the moment will lead to a natural drawdown, destroying the account. So it's important to view okay, is my edge big enough and is my frequency high enough to even have decent returns over the months of time, as he needs to use a lot of risk as he's taken way less trades. And if the edge is very tight and does not have a lot of room, it's very dangerous to trade such a manner and trades months and for months and for months without really having a big expectancies, as fees, commissions or slippage could take out most of the profits. So we'll head on to the last situation is the swing trader. Takes only 1 to 2 trades per week, around 6 to 8 per month, uses wide stops and targets with bigger reward potential, and has a high risk appetite because he manages only one personal account, trades less frequently and relies on a big win to carry performance. So in this instance, there's a 45% win rate, a 4R on average, risks about 1.5% of his capital per trade, has about 15% total risk on his account, has about, let's say, 2 trades per week, has an aggressive manner, and has about $25,000 at capital. So we'll see if we calculate this. This has a quite nice expectancy. The return per week isn't that special, but he can manage this using his risk. So the return isn't per se special, but the expectancy is high above 0. So he has a great gap between that. So he can manage his risk. He does currently manage his risk at $375, but he could maximize his potential as he can risk a bit more, being $1.67, so around $400 per trade. So this means there is still a lot of room left as he can sustain these 8 losses, but you can see that as the risk is quite aggressive, around 80%, having a chance of 8 losses in a row, we'll have a bit more dangerous series of trades being able to hit that. So yeah guys, this was the explanation about these different types of situations. I hope this stats map can help you. And I would love to see some comments or feedback about this, on what I could also add as inputs. So if you would like to see any calculation or formula for this to get also some more results, or even being able to download some type of profile for this, let me know what you think. I would appreciate feedback. If you liked the video, please leave a like, leave a comment, and let me know how you think this could impact your own trading, or this could help you in any way. If any of you has any recommendations for future videos, or you think something might help you in the future, please just let me know. I have the Discord link down in the comments. You can check it out. You can even message me in there, and just let know what could help you as a trader, or what could potentially help anyone as a trader, so I can build that. Ciao, ciao guys.